Now I'd like to bring on Fox Business contributor from Kingsview Wealth Management, Scott Martin. Scott, I want to pick up on that conversation with gold. You've been in gold here. You talked about being long it. It's kind of stalled a little bit. Are you, though, convinced it still has the ability to be a hedge against inflation and a store of value?
Yeah, and Charles, we also like it because it's not a bond position and it's not an equity position. So if you're adding gold to your portfolio or looking to do so, I think you got to check out the correlation value that it presents to a portfolio, because you're right, these days, with so much uncertainty ahead, both in the economy and in what DC and what the Fed is going to do going forward, as you were just discussing, gold can actually come in handy in either of those times when either we're stimulating or pulling back stimulus, because you'll see people flee the volatility of the equity markets and go into gold as a solution.
You've expressed, at least earlier this year, you expressed some concern about the junk bond yields. You were worried about how low they were. They've only gotten lower. What does this say? I mean, what's the message here? And what kind of adjustments, if any, have you made because of this in your portfolio?
Well, we still own junk bonds, but you're right. I mean, the yield on junk bonds is meager at best. And so it's just a liquidity rush, really, Charles. I mean, investors are out there seeking any yield they can find anywhere in the bond market. So that, to me, is another kind of indicator of things just getting a little bit overcooked here on the bond side. So when you're looking at yields, say in the 10-year Treasury, as you were just talking, I think we've probably seen the lows or come pretty close to them for the year, and we expect yields to start rising here in the next few months.
Last time I saw you, you were getting a little bit more aggressive on the equity side. Where are you now? By the way, where are you most concentrated, your biggest investments?
Yeah, consumer discretionary mainly, Charles, as the reopening keeps happening. The consumer's in the best shape they've been in many, many years. So we like the consumer discretionary names, the Amazons of the world. But so far, yes, we've been adding to things, like I mentioned last week, that drop on, say, good news. We've had a slew of earnings reports come out that have been relatively good. Things like Apple and other technology companies have pulled back some. We've been adding on those dips because the long-term story is still in place for a lot of these companies. And on short-term weakness, that's when you got to get in and add to those positions.
Hashtag buy the dip. I'm with you, my man. I think people are nuts. I don't know who's selling, if it's just the computers, the algorithms, but if you are selling Apple and Amazon and those kind of earnings, you've lost it. Hey, Scott, thanks so much. Appreciate it.
See ya.
Speaking of which, folks, we're